Hi, Shri Sokomoto with Caliber Real Estate Group here. We are now shooting our market reports on a weekly basis just because there's so much changing so quickly. So this one is shot as of March 30th. Oops, that's the wrong button. Just want to go over the mortgage news because that's been um, one of the main questions we've been getting a ton lately. Jumbo loans are still available. Uh, they are a little bit harder to qualify for, but they are still available. What happened is the servicers that were purchasing the jumbo loans are no longer in that space anymore. So there are still a couple of the bigger banks that are still doing them, but like I said, they're just a little bit harder to get. Um, so when you hear the news that's saying no more jumbos, that's not exactly true. They are there. They're just a little bit harder to get. Rates are fluctuating on a day-to-day basis too. They're not as low as they were a couple of weeks ago when they were down in that 3.3 range. Depending on your credit score, the amount of equity you're going to have in the home, they're anywhere in the high threes, low fours, which is still really good compared to what they used to be this time last year, or even if you look at the historic numbers. So rates are still really good, comparatively speaking, just not quite as low as they were a couple weeks ago. Cash out refinances are available depending again on your credit score, the amount of equity you have in the home. You need at least 80% equity to pull money out. And then obviously if you still have a job. If you are working right now and you're just unsure of the future situation for you personally and want to pull out money and have that nest egg, it's really a good time because a lot of people have interest rates on their current mortgage that's higher anyway. Pull the cash out and you may be able to pay off some higher uh, some debt with some higher interest rates, or just have that nest egg, like I said. And then lastly, we've had a lot of questions about should I be paying my mortgage? Yes, you should pay your mortgage. This is not 2008 where the servicers were saying you have to be in default for us to even talk to you about doing a loan mod or anything like that. So this is not that. This is not like the last time around. If you have lost your job and you can't pay your mortgage, contact your servicer. They'll walk you through what steps you need to go through. But like I said, this is not 2008 where a lot of the servicers said you had to be in default before they even would talk to you. So pay your mortgage if possible. If you can't, contact your mortgage servicer. Everybody is saying that the housing market is going to crash because of this recession. Well, what happened the last time around was caused by the housing market, right? In 2008, the housing market and the poor loans caused the stock market to crash. And as a result, housing prices depreciated quite a bit. That's not the case this time around. What they're comparing, what's happening right now, is they're comparing it to the dot-com crash and 9/11. During that time, the stock market went down 45% and home prices actually went up. As of closing last week, the stock market, I believe, is down about 15% on for a month's basis. So the stock market is fluctuating a ton right now too, but it's nowhere near that 45% drop that we saw um, even in 2000, 2001. But if you look back at the how 2008, it dropped 51%. So if you look at a 1 year span, I think that we are down about, sorry, I don't want to give you the wrong numbers. So for a year's time, we're down 7%. For the month's time, we're down 15% on the S&P 500. And this was as of closing last week. So we're not in the same space that we were in 2008, where the housing market caused the crash of the stock market. Um, we're more along these lines. And part of the reason that we are not in the same space that we were in 2008 is that you can see here, people were using their houses as ATMs. They were pulling out so much equity in their homes. So over the 3 year span, there was $824 billion cashed out. And if you look at right now, there's only 232 billion. So that's a huge difference, right? People learn from the last time around. There's 50% of homeowners in the United States have 50% or more equity. So we're not in the same situation that we were last time around. Is the housing market going to stop like everywhere everything else is? Probably, but they're saying that we're going to recover quickly. So in the next first 2 quarters of this year, we're going to take a huge hit in the GDP. But if you look at the in the third quarter, they're saying that we're going to have a 12% recovery. So this is not going to be something that is going to be lasting a long time. We're not going to we're not going to be in the same space that we were in 2008. The state of California just put out yesterday that we are essential. We're essential workers, essential, so that escrows are still signing loan docs. The title companies are still recording deeds. So people are still looking to buy and sell right now. Um, so again, this is not the same as 2008 in any way, shape, or form. If you have questions, we are doing listing appointments virtually. We're showing homes via FaceTime, shooting videos for people. So if you have any questions about whether things are still happening, if you do have a need, please feel free to reach out to us. If any of this information that I put out here is helpful, please share it. Please leave us a comment. We'd love to hear from you. I'd love to hear if you have any other questions, how we can help. Please feel free to reach out to us. Hope you're staying safe. Thanks. Have a great rest of your day.